So let's talk a little bit about the range of coverage, the types of plans that different employers get in providing medical insurance for their employees.
Well, pretty much today you have you have the HMO plan, which is a very comprehensive plan of benefits that has co-payments typically for encounters with physicians and labs and emergency rooms and hospitals and those kinds of things. And then the plan typically pays a great portion of the amount of the services. These plans in the past have gone from the lower priced plans to now they've morphed into the higher priced plans because they typically have 100% or close to 100% coverage for the actual benefit. The HMO plan is different from the others in that you're required to have a primary care physician, and then that physician directs your care. So they're responsible, and they do take financial responsibility in some ways. So that's a good option for high-end users, I would say. PPO plans, those are plans that use a network of providers, and in order to get in the network, you have to be certainly qualified to do the work that you're planning to do, as well as willing to discount your price to be a part of the plan in that. And those plans are typically designed in the same general way, with co-pays and counter fees, if you will, for office visits with physicians and that kind of thing. And then co-insurance, whereas you pay a percentage of the bill, and the insurance company pays the difference in that. HSA plans are the latest, and those could be either a PPO or an HMO. And actually, the HSA is a funding mechanism that is attached to a high deductible health plan. So maybe the health plan would have a $6,000 deductible for a family, and before any benefits are paid by the provider, the insurance carrier, I would be responsible to pay those up front as the participant. And these plans are designed to get the participants back in as active consumers of healthcare, to where the cost of the service makes a difference to them. Today, now thanks to healthcare reform, all preventive care and services are covered in all plans at 100%. That's required. So it doesn't matter whether you have an HMO, a PPO, or a high deductible health plan in conjunction with an HSA. The insurance company or provider will pay your preventive work at 100%, which is, in many instances, that may be everything that people do in a year is their preventive work. So
what would preventive would be like getting a medical examination?
Medical exam, routine lab work that is in conjunction with that exam, vaccination, immunizations for women, be mammography and their regular OB visits, those kinds of things.
Wow.
So it's a very comprehensive idea there, and that's again included in all plans. So
okay, so why don't we talk a little bit about, well, first of all, before I get into that, let's talk about the health savings account. So it's almost like a bank account. Actually, I guess it's supposed to be, in a sense, a form of individual retirement account in a way, but it's for medical expenses. And do you use like a credit card usually with this? Or not a credit card, but I guess a debit card.
Debit card, yeah. Typically, I wouldn't say it's a retirement account. It could be used to supplement a retirement account. The design of the plan is for you to, on a pre-tax basis, as a participant or an employer, to make deposits to this account, which then can be used tax-free by the employee to reimburse themselves for unreimbursed medical, dental, vision expenses. Now, the key provision of this plan is if at the end of the year I haven't used the money that I've deposited to my HSA plan, that rolls over to the next year, and that rollover is continuous until you end up taking it out. So I think that's where it kind of you get the idea that at age 65, I've got, X number of thousands of dollars in my HSA account, and I'm not going to use it for medical expenses, I'm going to get on Medicare, then you can use that to supplement.
But you can't put really huge amounts aside for this, right?
No, there's a limitation which goes up periodically. It's not every year, but it's roughly 3,000 for an individual today, 3,050 I think, and 6,050 for a person with dependents. So it's a substantial amount, and
it can add up if you don't dig into it too heavy in the early years.
Yeah, absolutely, and it's clearly not designed to forego reimbursing yourself for health expenses because you want to save the money, but it does have flexibility to it. Whereas if you in fact don't use it by the end of the year, you can continue to use roll that over and have it available for future years.
I think the other thing that we were talking about is that there are some types of medical expenses that may not be covered, like alternative health care, like acupuncture, for example, or chiropractic. Some of these may not be covered by your regular medical plan, but they may be covered by your HSA. But now you got to get a doctor's prescription, so maybe you can talk about that for a few minutes.
That's absolutely right. I thought there was going to be a great opportunity for some of the alternative types of care that now are becoming well known and well used in our country. And yet they've now put a limitation effective January 1
of 2011, right?
Yes,
okay.
That you, in order to reimburse through a plan like this for over-the-counter medicine, you have to have a doctor's prescription. Now, my suspicion is that people will be able to get those, and they will be successful at that, and so that may or may not, hurt that. There is another part of the law that we're lobbying to have repealed, and that is the part that limits the contributions to flexible spending type plans, which this is a type of that plan. There's a piece in the law now that limits that to $2,500. It's coming up in the future, but even at that, that's still a portion of that, which will allow you some flexibility. And again, it gets you back in through the HSA plan into the marketplace of actually caring how much the real bill is, not just what your copay is for your coverages.
Why don't we talk for a few minutes about flexible spending accounts? It wasn't really on our list, but a lot of employers offer them, and so and maybe we can compare it a little bit to the HSA, but in this case, well, why don't you go ahead and...
Yeah, the flexible spending account I think is kind of the precursor to the HSA plan. It's an employer-sponsored plan. The HSA plan can be employer or employee or friend, or anybody can put money in that for you. But the flexible FSA plan, the drawback of that plan has been in the past and still remains, is that you have a use it or lose it clause, which means you have to be very careful in how much of your own money you're putting into the plan, because if you don't use that by the end of either the year or the extended period of time, which the employer can allow you to do, that actually reverts back to the employer, and there's no legal way that employer can get that to you. So that's not so good, but it's also not so bad. It is certainly a great plan for limited use type things. If you have an HSA, you can have a flexible spending account for limited uses, which is something other than what you're doing with medical insurance, so maybe dental or vision or something like that. You did ask and mention the alternative providers that are eligible to reimburse through there, and I think that's again a very favorable aspect of these plans, is that they do allow some of the Indian healing and these the massage therapy, these kinds of things, to have a potential to be reimbursed on a pre-tax basis. So that to me is a great advantage.
So what you're doing in the flexible spending account basically is you're telling the employer, instead of paying me salary, you have to tell them this in advance, by the way, instead of paying me salary, I want you to take X percentage of my compensation and put it into this flexible spending account. It gets subtracted from your wages, and then it's available to pay these. But you need to, again, as you said, figure very carefully what you're going to do. But for example, if you've got an operation and you're going to have a high deductible or something that you're going to have to pay, it might be very helpful.
Sure, and I think the flexible spending account, the part that allows dependent care expenses to be deducted is very favorable, and that's you're allowed to do that on a pre-tax basis instead of after-tax.
Okay. So that's just another benefit that's available. So one is medical, but there are others.
Right.
All right.
How much time do we have left?
Not very much.
I've got something I would like to bring up.
Well, why don't you go ahead?
Real quickly that is the idea of self-insurance.
Yes.
Which I think is today is gaining traction. I like to think that I present it to the people that I deal with on a regular basis, and that is the idea of having a much higher deductible, say $10,000 or $20,000 or maybe $25,000 deductible, and for the insured portion of the plan, and then actually designing a set of benefits that you can provide underneath that to the employees, which then could be based on your own particular needs or your own employee-based needs. So I think this is going to be something that you're going to see more of in the future. Is the opportunity for employers to provide a kind of a higher level of benefits and still be able to keep premiums and costs down through the use of a self-insured portion of their plan.
So that's something that people, if you have a company, you might want to talk to your insurance person about that as an alternative. Okay, well, I think we're getting down to close to the end here. But there's one thing, maybe you can give me a short answer. Are people really saving very much money and premium if they cut one of these flexible spending accounts? Excuse me, the health savings account.
Yeah, well, again, the health savings account is a funding mechanism that goes hand in hand with a high deductible plan. So in the past, people have been able to save substantial amounts of monthly premium flow if they went to a high deductible plan. Now those plans have come more into line with the lower end PPO type of plans that have a copay because of the overutilization of those types of plans. So the pricing differential now is not as great, but still an opportunity, even if you don't save money, to maybe use the money that you're spending more effectively to help benefit your employee population on the things that are important to them. Okay.
Well, we just have a very short time left, about a minute. So maybe you can give us a final thought before we conclude here.
Sure. I think that employers who provide an opportunity for their employees to have medical insurance, dental insurance, vision, life insurance, whatever employee benefits that they have, are doing their employee base a tremendous service and helping them immensely in planning for the things, again, that they cannot budget for effectively. The opportunity of most insurance, and even today individual insurance, is purchased through the workplace. And so without that opportunity, people would have less insurance than they currently have today, and we know that there's many people that are uninsured and many people that are underinsured in our society.
Okay. Don, thank you again for being my guest. Hope you can come back again.
Thanks.
Folks, we're about out of time here. So particularly for the small business owners, I hope that we've given you some valuable information to think about here today. And I hope you can join us next time on Financial Insider Weekly.